Hi traders, this is continuation of the previous video. In the previous video you saw flawless short. This flawless short took more than 30 minutes to break through key Fibonacci target. We took a well-deserved break and we are right now witnessing Fibonacci Trend Inception, Fibonacci reversal zone in a play. Stunning and flawless reminder, the power of the method in ultimate trend inception. Stunning reminder of what you saw in the previous video. Exact same bottom you're witnessing in front of you right now is what played out on daily chart for the last few days since early August. Identical Fibonacci level in front of you right now, not the place to ever short near, the place to monitor for reversal from. What would be a problem to the upside? Key Fibonacci resistance. If price is not breaking through, it's a bullish fluff. It's a bullish junk. There is no reason to pull a trigger yet. Black and white. Rules are met, take a trade. Rules are not met, do not touch this market. And while we're waiting on S&P, just stunning reminder, as shown in the previous video, this is gold in the month of August. Ultimate trend inception, ultimate bottom, no matter what chart you trade. This was a major problem on gold, taking gold 20 plus hours to break through. Bullish rally on gold overextended. Exact same Fibonacci reversal zone is reached to the upside. However, to the downside, gold cannot break through. On gold, it is key Fibonacci support, and gold reaches again and again and again, and struggling at Fibonacci reversal zone. And if I convert this chart to 15-minute, identical accuracy will remain. Shock or not. Identical accuracy applies. If I squeeze this chart, what do you see? Ultimate precision, ultimate accuracy. Predictive Fibonacci power showing you ultimate trend reversal levels, ultimate Fibonacci support. And did we know or did we know that this would be a major problem? Did we know or did we know that price will tell us and show us clearly what separates bullish power from fluff? It is fluff, traders. It is not power that you've seen on gold. And if it taking gold 20 plus hours to break through this level, how long will it take S&P right now? Only when rules are met you can take a trade. Rules are not met, you cannot touch the market. Scanner flushed prior long alerts on gold. You are seeing that? Now not the place to buy gold. Now the place to exit your long. Scanner is not flashing any alert on S&P. Nothing but junk is present. Knowledgeable trader knows that. Trend inception in front of you, except buyers are struggling. Exact same thing as gold had done for 20 plus hours. And if I convert this exact same chart to 5 on gold, what would you see? Identical accuracy applies. And that's the power of the method. By the bottom. Pretty please, not the top. But only when rules are met, take a trade. Method known for ultimate accuracy at Institutional Trend Inception. And when market gives you nothing but baits at day trading trend inception, knowledgeable trader not touching this. Correct? Price is trying, but short sincerely this morning continue in a progress. No reason to buy this market. Fibonacci resistance not let buyers through. Correct? And if this afternoon price is at ultimate bottom, knowledgeable trader will take advantage of that. Because knowledgeable trader knows hand holding never a recipe for success. Sellers taking a pause. No bullish rally yet, but when it will play out as it played out on gold, knowledgeable trader will take advantage of that. It is that simple. As played out on S&P Daily in the month of June. Not the place to buy S&P at key Fibonacci resistance. Not the place to short S&P near at institutional trend inception. Why is market in so much pain this morning? Because we are dancing at institutional resistance. We are in the middle of institutional trend. Nothing happening here. Institutions taking a pause. And that's a pullback in front of you, sincerely this morning. Market collapsing lower is a gift. Massive number of alerts on short, not longs on S&P this morning. So when market collapses as low as possible, and rules Ahmed take a trade. It is that simple. So right now in front of you, key Fibonacci support. So buyers stepping in right now on S&P, it's a beautiful news. And again, this is institutional bottom. And again, this is institutional top. All the details in long-term class. Every Thursday. All the details in long-term module. That has multiple videos you can watch 24/7. And again, if I convert this chart to 5, what do you see? Stunning and flawless reminder of the events in the trading room since early this morning. Did we know or did we know that this is not the place to buy into? Of course, it is key Fibonacci resistance. And if I squeeze this chart, what do you see? Buy at ultimate bottom, at institutional trend inception. Do not ever enter into day trading resistance. Do not ever buy into institutional reversal zone. Ever. Never. No matter what chart you trade. So if buyers step in right now, it will be beautiful news. We are at the bottom, but we are getting a lot of baits. There are no trades. Knowledgeable trader excited as market give us everything we needed this morning. After ultimate chop, after ultimate pain at key Fibonacci resistance for more than 2 hours. Without long-term Fibonacci levels, you would never know. Why is this not the place to buy? But if you make an effort, which every beginner trader who ever took a course can do this, so can anyone. It is that simple. So we are on standby. Bearish pullback that we patiently monitored for gave us flawless structure. And right now this bearish pullback has a potential for bullish reversal. But pulling a trigger randomly will never work. Endless baits, endless, worthless, bullish pullbacks. We know that extremely well. Only when rules are met, only when scanner give you alert and market in flawless synchronicity you should take a trade. It is that simple. Shock or not, Amazon selling off and crashing every time. There is no bad news. So how is it possible? Simple. Market is flawless Fibonacci puzzle. This is what price does 80+% of the time. Not the place to buy, the place to exit your long. Spectacular earnings on Amazon do not mean a thing. Fibonacci reversal zone mean everything. Last year Amazon collapsed $700 plus. How much did Amazon collapse right now? Oops! $200 per share. Ouch. Stunning earnings don't mean a thing. Fibonacci reversal zone means everything. And that's the power of the method. So as oil rallies from the bottom, this is S&P now. Did we know or did we know that this is not the place to short? This is a place to monitor for long. Of course, we've been discussing that market will be spectacular because this morning we're dealing again and again and again with institutional support. And when the scanner starts giving you endless number of alerts, knowledgeable trader will take a trade. Knowledgeable trader will buy the bottom. And that's the power of the method. No matter if you trade Apple, no matter if you trade oil, no matter if you trade S&P, price action remains the same. Do not ever buy into S&P resistance. Obey the rules and trade from Fibonacci levels. Flawless stunning short reached short level exhaustion levels. Market setting up for flawless afternoon. Know your Fibonacci levels. Brilliant trader taking long on S&P. The only thing that left on S&P to break through this key Fibonacci resistance. Again, the trade is not on 1 minute. For the trading room, I convert every single chart to one to show you ultimate accuracy of the method. Exact same Fibonacci resistance you saw on Apple, you saw on Amazon, you saw on oil, in front of you on S&P. Did we know or did we know that this would be stunning and flawless? Of course, it is institutional bottom. Boom. Price comes to this level, knowledgeable trader takes the profits of the table on his long and moving that stop outside of break even, scaling out accordingly. So boom, Brahim just started course. Second week in the course. What a progress. Brahim is making an effort. Love it. What a compliment. I simply love what I do. There is no surprise here. So what is the difference between Brahim versus follower? If the follower throws random trade into the market at random market order, it's a problem, especially during volatile market conditions. Stop bracket orders 95% of the time. Brahman profit 3 points. Beautiful place to be. Stop outside of break-even. This problem was expected. We discussed this with students. So as you could see, students absolutely prepared, students absolutely understanding why this is happening now. This was expected. Knowledgeable trader knows that. Key Fibonacci resistance remains a problem. It is that simple. Let's go S&P. You can do so much better than this. Alerts keep coming. It's a good news. So again, traders, as we're discussing with students, this remains a major problem. Knowledgeable trader moved the stop outside of break-even and taking profits off the table. I can speak only so fast. Key Fibonacci resistance is a major problem. These crucial smallest details in trading are everything. When you separate spectacular bullish rallies with pretty painful bullish crawl, when you know when to take profits off the table and protect yourself. Correct? This is a major problem. Knowledgeable trader walking away with profit. Trader who is shooting for random targets cannot succeed. Red flags remain all over the place. And that's what separates knowledge from being a follower. Being a follower never ever recipe for success. What am I doing next? Meeting with our phenomenal programmer. Boom. Review the information on the website and do not hesitate to contact me. All courses under courses section. And when the new software comes out, sometimes next month, students will be the first to take advantage of new software. And when Roger posting me this, he just started the course a few weeks ago. He's taking it slow. 2 trade setups, 2 winners. Now have to work on my patience. Roger had been trying for many years. So, mindset is a problem. It is core of the course. Simply decide on the course appropriate for you. And if you are in Asia or Australia or Europe, it's not a problem. You can view videos 24/7. If you're contemplating private mentoring, pretty please contact me first. But give yourself a favor. Review the information on the website and remember, this is the last few days for the special. Course is almost sold out with the special we've been offering. It's gone. And again, when the new software comes out next month, students will be the first in line. And when 100 software licenses sold out, it will not be available any longer. So choice is yours. If you want to trade like Bill does, if you want to trade like Brad does, if you want to trade like Brahim and Roger does, I look forward working with you. But only if you're ready to be a quality trader. Pretty please, contact me. 925-257-4298 or info@fibinstitute.com. This is what I love about our people, how they support each other. You become who you swim with. So if you're serious about quality trading, you will be surrounded by quality traders. All you have to do, make an effort.